Akinola Jones, Head of Financial Advisory at Primera Africa Finance, joins me in the studio today right now. Aki, it's good to have you in the studio. The market, as we've seen over the last few days, some trading sideways. In fact, maybe a downward bias, slight downward bias. It's come down a few times this week. Like I mentioned earlier, we are now seeing the insurance companies lead the way in terms of the losses, and it's amazing because that sector really hasn't taken off. But your thoughts on the broad market performance right now?
As we saw yesterday, 80% of trading activity was mostly banking stocks, financial services stocks. Tier 1 banks are beginning to flatten out. I think there's still a huge potential in Tier 2 banks, as we, Diamond Bank, as we saw in their results, strong top line numbers, and basically all the Tier 1 banks definitely gave us strong top line numbers. We saw a lot of reduction in the impairments. We expect loan growth. We expect with the MPR coming up, the CBN to at least reduce by 0.5 basis points.
So you're expecting them to take it down this time?
Yeah, we're definitely expecting them. I'm usually on the flat end of things, but this time I definitely expect a reduction. The CBN has kept to their stabilization policy, and we definitely expect that to happen.
Okay, but coming back to the banks, what are the key takeaways for you from the results we've seen so far? And I think the broad sense I'm getting from many analysts is that numbers are good. At least we're not seeing any major negative surprises, but we're seeing the momentum, the earnings momentum growth that we saw in Q2 weaken a little bit in Q3.
Yeah, top line numbers are very good. They're still very good. We're seeing reduction in the, of course, as I said earlier, in the impairments, but there's it's beginning to flatten out, and we're beginning to see a lot of profit taking. I don't see the banks performing, the Tier 1 banks especially, doing anything radical between now and year end. So, when it comes to their share price and the market, in relation to the market, I don't see any significant upside happening between.
Is that for the Tier 1s or
definitely Tier 1s?
Banks in general?
Tier 1s. Okay. Now for the Tier 2s, there's definitely still a lot of potential. The Sky banks, the Diamond banks, there's still a lot of upside potential under valuation. You can definitely still pick up in those banks. But
I guess it's a bit natural for investors to pile up in the stronger banks first, and then move on to the second. And then maybe at some point we may even see some interest in the likes of the insurance stocks, which I mentioned earlier, are somewhat weak right now. Yeah. But okay, let's talk about foreign portfolio investors and the impact they're having on this market. Of course, we know the impact has been massive for the bond market. Clearly, they're also the leaders in the equity space. Your thoughts on the dynamics there and how things are going to play out going forward? A lot of people are now talking about maybe local investors gradually leading the way in the market.
Yeah, we have to look at it from three perspectives. I think most of the foreign investors are looking for three things. They're looking for ease of capital inflows, they're looking for returns, and they're also looking at exchange rate volatility. In terms of ease of capital inflows, the CBN has definitely relaxed a lot of the restrictions from 1 year to 90, from 90 days to about 1 year. So, when it comes to ease of capital inflows, that's, we can definitely see good things happening on that end. Returns, our equities market is doing about 30% year to date. So, there's most of our foreign investors we've spoken to are looking for double-digit returns. So this market definitely presents that to them. And then there's definitely the undervaluation aspect, whereby they come in and they're getting very good deals and seeing very good returns.
I think a very interesting point to make is that because cost of capital is so low elsewhere, even if the likes of Nestle, which many people continue to talk about, saying that it's somewhat overpriced. But when you look at it from a dividend yield perspective, even if you're going to get a 2% or 3%, it's probably better than what you will get in fixed income elsewhere. Yeah, so I think the flow into frontier and emerging market is something that is clearly underpinning this move.
Yeah, it definitely is. There's a strong, with the issues going on in Europe, with the issues going on in the West, we definitely see more and more capital inflows. Even if we look back to last year, we look back to 2010, the numbers we're seeing this year are definitely getting somewhere close. In terms of inflows, we're seeing about 300 billion naira. As of 2 years ago, we're seeing something similar. So we're seeing...
It hasn't let up at all.
Yeah, similar numbers happening.
Okay.
Definitely.
Fortunately, we can't take it further, but thank you so much, Akinola Jones from Primera Africa Finance, giving us his perspective on the Nigerian market.